Said that the central bank came in and bought around $8 million worth of hard currency, and that's assisting the shilling to depreciate. We know that it breached that key 80 shilling level on Friday, so we did see a little bit of positivity coming through.
Thank you for having me. Now, we saw the central bank coming to the market today, buying around $8 million today. So, I mean, according to what was in the market, they were basically boosting their foreign exchange reserves in line with their wider policy that they want to have at least a 4-month import cover in terms of foreign reserves. But at least, according to sentiments in the market, we don't really expect them to come in at least again in the market for this particular week, so that at least we can have a fair pricing of the shilling to the dollar.
Well, Henry, you know, some investors say that they're relatively aggravated with the central bank's move to intervene in the market and buying up hard currency, because some say it is at a loss. What is your view on this?
Well, ideally, you would have, you'd have some people quite discontented with the move. But you have to look at the wider picture of what central bank is trying to do. I mean, in terms of at a macroeconomic level, trying to have that safety net of the 4 months. And again, also taking into perspective what the U.S. Federal Bank did. I mean, with their quantitative easing program. So all of these factors, will come in. In the field to determine where the exchange rate goes. But again, taking into account the dollar inflows we expect in the course of this particular period in the year, I do expect that towards the shilling will appreciate marginally as the week comes to a close.
Let's touch on the fixed income markets. Market participants trading the 10-year Treasury bond, and we know that that was heavily subscribed when it was launched on October the 28th. Give us an indication of how appetite has started to increase for 10-year bonds in Kenya.
Right. For the 10-year, we saw an oversubscription for the bond. I mean, taking into account where people are expecting the results for the primary to come out at around the level of 8.3, 7.9% yields, and the actual results came out at 9.4%. So it tells you that people were really expecting slightly lower yields. Now, what is happening in the market right now? We saw some quite a number of trades that happened in the last 2 days of last week. We saw the paper trade almost 2 point something billion. in the market. So what it shows you that one, the paper is correcting so that it adjusts to where it should be in the market, and two, we are seeing more and more banks trading among themselves as they try to revalue their books according to the yield curve.
Well, just touching on asset allocation and portfolio management, what kind of appetite have we seen for short, medium term and longer term paper? Where are you seeing the most demand coming through at this point in time?
The most demand, it will depend on the investment style. Because for commercial banks, for whom longer term bonds are not favorable to them, activity tends to be around the 5-year, 10-year level. But if you go to investment to fund managers who are quite keen on longer term bonds, then you tend to find them on the 15 to the 25-year level. So, but what we've seen in the market is the 5 to 10-year, particularly this new 10-year, has been quite predominant for the last 3-4 days. So in terms of asset allocation, I do expect to see the 10-year trade a bit more for this week.
Investors, of course, looking for yield. What is foreign participation in Kenya's bond market at this point in time? Have we seen an increase as what we've seen here in South Africa?
Not quite. But what I'll bring into mind is following the automation of the bonds trading, we did see high turnover, high volume levels in the market. Now, the question is, how is it spread out within the market? And what comes to light is that you see, particularly for commercial banks, are the ones who are dominating the trading. 60% of the trades are still with commercial banks. Now, we are still making strides on the retail end, whereby we see more and more individual clients coming to buy the bonds. But activity on this end is quite marginal compared to what the commercial banks are doing. So, again, with the yields currently depressed, the incentive to invest in the bonds market vis-a-vis other investment options that are there, we are finding that trading has been quite diminished in the market.
Fantastic. Henry, thank you so much for those insights.